left, Craig Polly, who is the founder and director of Digital Risk Services, which is a loss adjustment and consultant for some major players in the London market. He's also a bit of a blockchain guru, so we'll be firing some questions across at him. Iona, over here, is the head of the European Government Affairs for Citibank, and in a previous life was a senior political advisor for the European Parliament. So anything financial, regulatory, I think we will also be coming over to you. Matt Waller, a cyber and tech underwriter from Tarion. Matt's very much one of the leading underwriters within the market that we go to for blockchain, and so he's come up here today to discuss the risk transfer side of cyber. Next we have Luke, who kindly ran us through the demo, the live hack from Cylance, and similarly to us, the Cylance guys will be around for the rest of the day, so please pull them aside for any questions that you might have about the services they provide for cybersecurity as well. And at the end, man cut from the same cloth, James Bullock-Webster, broker extraordinaire. He is a cyber and tech broker for Paragon as well. We work on the same team on the fintech clients and looking more at blockchain risks as well. So we'll dive straight in. And the first topic, I think, for all of us would be the GDPR. Will touched on this earlier, everyone's favourite friend. So it came into force on the 25th of May this year. And I know from a sales perspective that it was very much a driving force of how you would vamp up sales. Data protection's coming in, have you got your cybersecurity in place? I think one of a good question to start off with, perhaps for Matt, perhaps for Iona, is do you think outside of the US obviously, how much do you think that GDPR has contributed to the mass increase in cyber purchases?
Yeah, sure. Hello, everyone. So I think what we found from an insurance standpoint is certainly the number of inquiries are going up. But what actually happened was a lot of clients were woefully unprepared. So, you might have seen some case examples. A lot of emails still coming through around consent agreements, understanding how they're handling your information and giving the proper disclosures well after the May 25th deadline. So if you look at that cycle of where clients are and where companies are, they're a little bit behind the curve, which in turn puts the insurance, again, a little bit further behind because there's a lot of education around cyber insurance that's needed. Big events, though, are probably going to change that. The headlines of British Airways and their payment system breach is definitely raising a lot of eyebrows. I mean, if you look at their 4% penalty, that's 500 million sterling. And similarly, which is probably the biggest development under GDPR, the ability to bring class actions. As an American, very used to that, dynamic, but that's something entirely new to the UK and Europe. And the damages that are alleged under the class action are 500 million. So you're looking at a billion sterling potentially in damages brought from a 380,000 breach. That's one end of the spectrum. What's really interesting about GDPR, it affects everyone, every business within the EU that is handling European personal data. So from our perspective, we have to manage the headlines, but also understand that small businesses are at risk too.
Yeah, just a small comment on my side. Obviously, banks and financial institutions in general, given the high value assets stored on their networks, have always been cyber aware and very well prepared to deal with these attacks. So in that respect, GDPR didn't change much in mentality. On the contrary, I would say that for financial services, there are some specific pain points. Why? Because we need to comply, we need to do our KYC, know your customer, and anti-money laundering processes, which require data maximization, and GDPR requires data minimization. So in some respect, there's some friction between financial services specific laws and GDPR. I would say that the area where we were affected is in third-party vendors, because we operate in an ecosystem. So we need to ensure that those who interact with us have the same level of cybersecurity safeguards. So in that respect, GDPR has kind of changed the setting. Also, just to make a comment, GDPR does not only affect Europe, so it affects businesses that interact or that serve EU citizens. So this whole extraterritoriality effect is global, I would say. And if we look around the world, we see many countries that are looking at GDPR as, kind of a standard-setting law, and California is one example, right? They want to use the same data privacy standards because, let's face it, most of businesses today are global. So why not do it from the onset?
Sure, and with blockchain, that is the buzzword for this panel, by the way, in case you didn't realize, where does that stand on this front? So if you're putting records onto the blockchain, it's immutable, but obviously as an EU citizen, I have the right to request that is deleted.
Yeah, so first of all, I would say, I'm speaking from a financial institution standpoint. At the moment, what we're engaging in blockchain is permissioned DLT solutions, private permissioned environments where we control the governance structure and the participants, etc. So in that particular case, data immutability is not a given. You can reverse transactions. If the governance structure is built in such a way that you can actually control how the ledger works, then this whole public blockchain structure does not apply anymore. So if you would want your data to be deleted, maybe if all the participants in the private permission network decide to do so, that can happen. Of course, that does not apply in the public blockchain space, and the right to be forgotten, Article 17, this is what you're referring to, is an issue in terms of blockchain/GDPR compliance. But I know that there have been some solutions put forward. One of them is about encrypting, hashing the data that is on the ledger, so then it's not accessible, and keeping off ledger the actual data that you can then delete. So there are some solutions around, or some solutions are being built around the right to be forgotten in blockchain.
Thank you. Moving on to the sort of computer crime, which we've just seen a demo of what an example of that against cyber insurance. Matt, James, from the insurance side of this, what do we need to know? What's the biggest risks that clients are faced with these days?
Well, I think what people are most concerned about is safeguarding their reputation. And I think that probably stands for most companies. There's a huge amount of cybercrime going on. We've just seen an example of ransomware, how easy it is to infect businesses. When this happens, when you lose customer data, it's very easy to fall into the trap of not being prepared, not thinking about how you're going to react to that when it happens. And partnering with a really good insurance carrier that can set out who the vendors are to help you in the times of crisis is probably the difference between nailing it and safeguarding your reputation, protecting your balance sheet, and not doing, having a massive crash. And that could go for a public company or a private company. Fantastic
segue into Matt, partner.
So exactly as James is saying, I mean, the transfer of risk is really, there's a response process that is able to be achieved through a cyber policy, but just as importantly, it's the mitigation of reputation and engaging with the appropriate vendors, for example, Cylance, that can help you through that process is really critical, which also manages the expectations to regulators. Again, under GDPR, the 72-hour notification period, there's the ability within that to manage that reputational harm.
Okay, great. Just as we wanted to use Slido, but unfortunately low tech on this panel. Can we have a show of hands as to who, whether individually or as a corporation, has had a hack or a data breach of some kind, from up and down? Literally one person, two.
Come on, admit it.
Sweet, nice. Okay, well that's obviously very good. You're obviously insured with the right guys. I have a question for Luke. I'm going to bring the mic over, if that's okay. But what practical steps can you take to integrate cyber risk into your value proposition from a company perspective?
Sure. So I think, especially with GDPR and public reporting and tightening of timescales, a lot of this comes down to the ability to have a good message when it happens. The legal test, certainly in the UK, has always been, are you working to the level your peers would? Have you made the same preparatory steps? Have you got a good strategy for transferring risk, etc.? And in a market where historically there wasn't a lot of pricing data and there were lots of offerings kind of coming out the same spate, I think making yourself stand out from the crowd is really down to what you provide. We touched on the idea that you press the panic button, your provider then has the ability to kind of coach you and walk you through it. In America especially, we're seeing kind of a strong partnership between legal and insurance and kind of tech companies like ourselves. I think it's those preparatory steps, those relationship buildings, and really just giving some thought beforehand to what you do and then communicating that to your client base. Everyone's going to come to their own decision as a maturity level in the industry, but we need thought leadership, and I think insurers and legal and regulators are a great body of that. So.
Fab. Well, so far it's been warm. It's vamping up to get a little bit hot. Classic. Moving on to digital assets, the security of digital assets, which is the latest asset class and also the newest emerging risk. The insurance industry is currently under attack with the number of crypto and blockchain-related companies that are looking for insurance. The problem is that not many underwriters want to accept the risk transfer. Traditionally, one might hear Bitcoin and think payments on the dark web, or they might hear blockchain and think block what? So I think it's time for the industry to wake up to this opportunity and begin to work towards understanding and supporting the risks that these businesses are facing. So we'll start number one. This is a question for Matt and Craig Iona. This is a definition question. Could you define what are cryptocurrencies and how they are different to blockchain technology?
Before you answer, I would like to ask the audience if there are any, I don't know how to say it, crypto assets holders or hodlers in the room. Now, aside from my fellow panelists, who would like to tell me what a crypto asset is? One of those who are holding them. It's a fair question, or if you invest in something, you should be able to define it. So who would like to give it a shot at? Just to ease the situation, regulators across the globe haven't done that yet, so please feel free to be as creative as you would want to. So, no one?
Well, do you have a definition, Iona?
Do I have a definition? I don't have a definition. First of all,
Would you say it's a store of value?
it's no no. You can, for some people, yes, depending on the function and utility. So I don't have a definition. The reason why I don't have a definition yet is that we're looking at an incipient technology. Well, first of all, let's make the distinction, and then I'll pass it over to you. So DLT, distributed ledger technologies, can mean, on the one hand, a mere upgraded database infrastructure, and to the other extreme, an internet counterculture, right? If we think about the fact that value was created with just a few lines of code. Crypto assets, crypto tokens, whatever we want to call them, are an application of blockchain technology. So it's important to make that distinction on the onset, from the onset. In terms of defining them, I don't have a definition. I can tell you, because I'm based in Brussels, I can tell you what the EU is doing in that respect. I think they're going to be slightly following the Swiss model, which is looking at these assets from a payment tokens, utility tokens, and asset tokens segmentization standpoint. And what the Swiss have also done was to divide the life cycle of a token and combine that with the segments that I've mentioned before in order to make the approach more granular. The EU at the moment is, first of all, trying to define, and by the EU I mean ESMA, which is one of the EU-level supervisory authorities, trying to define if these tokens are financial instruments to begin with. And if they are, which is not decided yet, it means that they're going to fall into financial instruments regulation. And that's where it gets even more complicated, because there's no definition. So there's a directive, MiFID, some of you people may have heard of it, but there's no clear definition of what a financial instrument is. That means, in turn, that member states have not the capacity. So member states are allowed to choose the way they define financial instruments. And you might be looking at a situation where the way France looks at financial instruments differs from the way Germany looks at financial instruments. So what ESMA is now doing is conducting a survey with all the member states to figure out how they would integrate these tokens into potentially financial instruments regulations. And if so, then some of them will be considered financial instruments, and if not, they will be considered something else. And some are looking at consumer protection laws, etc., and some other people are just saying we need to create something completely new to integrate.
Okay, thank you.
So that's what's happening at EU level.
That very, very high-level answer. Thank you very much. So, Matt, from your perspective, you're underwriting these risks. There's a difference, obviously, between DLT, blockchain, and the cryptocurrency that's associated with it.
Yeah.
What does, from a risk transfer perspective, what does that mean? What is that split?
Yeah, so as Iona pointed out, there's the cryptos are utilizing the blockchain to a degree, and the blockchain and technology is separate from crypto. The crypto world is an area that I think the insurance market is still trying to get their hands around. It's a highly targeted space, obviously. There was a breach at a Japanese exchange. It was a loss of $59 million the other day, and you continue to see these events take place in the crypto space. What we need to do, and this is an insurance market, and it's why we're here, and we're engaging with this community, is saying, what's the blockchain technology, and what are you doing as a business? Like, what are you utilizing the blockchain for? It's one area with crypto assets to utilize it for financial transactions, but blockchain has use across multiple areas. You know, we've seen blockchain utilized in the art dealer world. We've seen it utilized in insurance, of course, in utility space. And so what we need to do as a community, as an insurance community, is engage with those areas and those emerging risks. And really, you know, that's a focus on people. There's going to be a lot of talk today about, you know, the development of technology and development of insurtech for efficiencies. But what Lloyd's has historically done very well, and Lloyd's brokers like Paragon, and what we hope to do at Tarian is engage with that community and create a product and create a solution that meets everybody's needs in that space. And that comes to understanding the company.
Thank you.
Can I just jump in there and add something? I think in the past, insurance has been guilty of overcomplicating things. Where we need to get to is where we're building products for these emerging markets and making them as transparent and easy to understand. Blockchain is a big opportunity for us as brokers, as you all, to get ahead of the curve and take advantage of a changing landscape. But in some regards, cryptocurrency being part of that, there is a market for that in Lloyd's in London. There are specialists who can look at things, not hot wallets, but cold storage solutions for these companies. So there's a myriad of different opportunities and you know, taking advantage of real deep experts in Lloyd's is a way to get, you know, yourself a product that suits your needs for your business.
I might just pop in with something, if I may. I think, look, this market's been pretty good at responding to emerging risks. It's done it for quite a long time. And if we don't actually get on with it and address some of these, cyber was another one that, you know, had some slow uptake, but now we got, what, 68, I think, are now writing it. And it's sort of a fast follower. But with crypto, you got a perfect amalgam of cyber and financial institutions cover. And there's other people in the vertical space as well, from miners to people that design chips to doing all sorts of things that are not, they're all legitimate businesses, and they shouldn't be you know, biased out of this risk selection process because of, you know, or denied an opportunity to be insured simply because they're crypto.
Just one comment. You mentioned the hack on the Japanese crypto exchange. It's important to make the distinction between the hack of a blockchain, which hasn't occurred up until today, and hacking into a wallet that is either stored on a PC, or the hack that we've just witnessed, or that is stored on a crypto exchange. Blockchain. So there are ways to hack blockchain. 51% attack, Selfish Miner, Eclipse attack, but they haven't happened so far. So it's important to also make the distinction between the hack of the platform, which is maybe a dream up, I don't know, if maybe a state like North Korea or other states can manage to get, you know, the right amount of electricity and money to support a 51% hashing power attack, that might happen, but it hasn't happened so far. So we also need to look in the right places in terms of where we.
It's a new threat. It's an emerging threat for the market, and it's something that obviously it needs to be addressed and is being addressed. James, you said perhaps we need a new product, and I think perhaps Craig, you touched on it as well, saying that Lloyd's has done this before. It's handled challenging.
Yeah, we used to insure things being launched into space for the first time, or Cuthbert Heath, he managed to insure us against Zeppelin balloons bombing London. I mean, we should be able to tackle this, and it needs to be more of an engineered risk approach. If we take that, we should be able to get to it.
So my point is, do you think we need a new product, a new insurance product, or do you think it's more a culture shift and just waiting for Lloyd's to innovate as it always has done and then take on the risk?
I think if we can get some engagement around the topic, we can figure out the solution. It's just about, you know, coalescing around it, looking at the practical challenges, and understanding the centralized versus decentralized exposures that exist in the exchange space. I think that's where the hacks are all occurring of a great size, and the exchanges are the ones that are actually created the risk aggregation problem. And I'm looking forward to seeing some decentralized exchanges coming out where that risk starts to evaporate.
Good luck with tax authorities on decentralized exchanges.
James, you're seeing these risks come in. What's the client profile? I imagine there's sort of two types, high and low, in terms of the size of the business and the sort of background that maybe the directors have. What is it that you're seeing taken to the market?
There's tons of stuff. In terms of cyber risks or tech risks, they vary enormously in size. So minnows to monsters, I'd say. But there's different insurance products to fit all their needs and requirements. And it's about engagement. It's about understanding what fits for who. And that goes back to my point earlier about transparency and having products which are really easy to understand.
Luke, is there anything that you have from you guys? You must be seeing much more in terms of ransoms being demanded in Bitcoin. What's, in terms of your guys' security that you offer, do you have anything that's sort of set up specifically for that? I'll run this over to you.
Yep. So there's a couple of kind of approaches. It depends where you come into the attack. If you get in before things are encrypting or when they start encrypting, you can often limit the extent of the attack or perhaps prevent it. They're not usually the most sophisticated attacks in themselves. It's just that there's such high value and kind of immature and undefined that it hits quite hard. If you get in after everything's encrypted, then it's helping companies recover or decide what data is important or not, and kind of we do all those as well and have different products to prevent in the first place. And then worst possible case, you don't have backups, you've lost your data. Especially popular in America in the last few years, and I can see it coming here, is kind of that middleman for paying the ransom. It's negotiating a discount, getting some faith around the fact that if you pay,
We got
you get your data
brokers in
back.
it now?
Sorry?
There's brokers?
There's brokers for brokers, yeah. We've seen sometimes 2 or 3 middlemen between the person encrypting things and the payment body. And various government agencies have paid at various points as well, so it's a trend, and it's not the best outcome. And there's nothing to stop them going back in and re-encrypting after you paid the first time either. But really, from our point of view, it's that journey from best possible outcome is preventing up front. Middle ground is having a good set of partners, good ecosystem, and some thoughts of what you do. Things like putting the button on insurance. And then last possible is kind of limit the damage where you can, pay for what you have to potentially, and make do with that data you've lost, I suppose.
Thank you. Craig, question for you. You're working on the claims side of it. So far, we have had some hacks. We've had some recently. Matt touched on one that happened last week. What do you think in terms of going forward? How much do we need to rely on these claims to take place in order for the market to mature?
Well, I think most of the coverage that I've seen, and there's not a lot, but what I have seen is really on cold storage, which I don't necessarily rank as much of a risk at all if it's properly managed. I think it's the hot wallet risk that's the one that's causing the problem. I saw one quote the other week talking about a warm wallet. I have yet to understand what a warm wallet is, but I think that that seems to be the biggest concentration, the biggest aggregation of risk, and perhaps the most challenging to write because it's a single big event usually when it happens. It's a big number, and it's usually something pretty stupid. I mean, just aside from the crypto piece, the British Airways element was, I looked into that particular episode. That was 27 lines of code. That's all it took to do it, and that was enough to unseat the entire payment and booking system for British Airways for 3.5 weeks. So and I see coverage issues emerging because of that, and because that was an unpatched JavaScript library that sat there for 2.5 years undone, and that's all it was. And the MERS case again. One of the largest episodes we've had, and those were really unpatched servers, Windows 2000 servers. I mean, who's insuring a 17-year-old server? I think we should be using warranties to try and more effectively manage these things and control these risks.
Thank you. Hopefully, Matt, you're not insuring those. We've spoken a lot about the insurance side of crypto and blockchain here, but how are financial institutions like Citibank evaluating and implementing blockchain technology?
From various angles, from various vantage points. So first of all, I think all banks have looked at DLT solutions. I try to make that distinction because blockchain is a particular type of distributed ledger technology that aggregates data into blocks that are sequentially hashed between one another. So DLT, like I said when I started, can mean a new database structure, distributed database structure. So in that respect, why do I want to make that distinction? Because financial incumbents are looking at it from a private permissioned DLT, enterprise DLT space. So I think we are not at the stage where we can see transfer of value on the blockchain or necessarily banks engaging in open blockchains, but we're using blockchain for post-trade reconciliation, information reconciliation. I think that at Citi we have over 30 DLT-related projects, most of them around post-trade, and some of them in the payment space, where actually we have a project that links our Treasury and Trade Solution platform into NASDAQ's blockchain platform. So that would be one of the areas. The other one is investing in blockchain startups that might, devise a technology that would allow us in the future to maybe engage in the public blockchain space, which is not the case at the moment.
Fantastic. And your position, sorry to fire another one at you, within the EU, this might be one for you as well, Craig, but what's your prediction on when we're going to see any clarity on the regulatory movements that can happen? So Gibraltar, there's a lot going on. Malta, they're doing bits as well. So when do you think the rest of Europe is going to wake up to it?
On the ESMA?
Yeah.
Yes. So, first of all, the Swiss are the most advanced, I would say, in what they're trying to do. But we need to understand that sometimes no regulation means progressive regulation. So if something is not regulated, but it's still allowed to happen, we can fit it into the progressive regulation category. And Switzerland falls into that. Gibraltar falls into that. There's nothing at the moment. They're looking at devising something, but there's nothing valid at the moment. So as you rightly pointed out, the paper assessing what the member states have said in regards to those tokens, whether or not they're financial instruments or not, is supposed to come out. I think it has come. I mean, they got the results. They now need to make the analysis, because apparently the results were so versatile that it's going to be hard to create a summary of what it means. But I'm pretty sure not of all these tokens, at least not the way we look at them today from the payment, utility, and asset tokens standpoint, will be considered financial instruments.
So the Howey test is basically in need of a bit of a reboot, isn't it?
It's funny, we had a call with the SEC yesterday around
Did they
this.
call you?
Yes, they come. So they said, okay, Jana, we know you're going to be attending this panel tomorrow, so I just know. We had an AmCham call with them. And obviously, the U.S. is very much focused at looking at these tokens via a security vantage point. So for them, it's either a security or a commodity or a hybrid between the two. But they're using their securities law and they're making the analysis on a case-by-case basis. And I asked them, this works at a 200+ billion market cap, right? This whole case-by-case analysis. How about when the market gets bigger? And they said it wouldn't impact it.
When institutional investors get involved, it's going to be a lot more interesting.
It's true, but institutional investors, and I speak this for my own bank as well, will not get involved until we have the right safeguards in place. So banks are looking at entering the space via either custody solutions or asset tokenization, which is a safer way to enter the market. But I am one of the crypto proponents, so I do see a market being developed. And I think that industry should just sit together and figure out what these safeguards should be and be in touch with the regulators and work together on designing the right framework.
Certainly from an insurance perspective, I think we absolutely embrace any sort of regulation. And I think I can't speak on behalf of insurers, but I think once regulation is in place, whether or not it's in Gibraltar or Malta or Switzerland, there'll be much more uptake from the market to engage with these types of risk.
Do we, out of interest, have any underwriters here today or brokers within the market?
Look at the hands go up.
Oh, yeah, it's like that.
There we go. And are you seeing these risks? Blockchain risks, crypto? Yes. They work with us, that's not fair.
Well, you asked the wrong question.
Conscious of time, so we've got just one last question, James. We're seeing a great number of these risks every day, and we're placing them into the market with the markets like MAT, Atarian. What can we do as an industry to move this forward? What can we do as a company and as an industry to better ourselves and make sure that we fully take on these risks?
I think it's engage with people who are out there who are the owners of these businesses, driving it forward, understand their needs, and then try and articulate that back to the markets and work together to better educate ourselves and the markets on what are the threats and how we can overcome them and get the right products.
Thank you very much. Guys, thank you very much for your time on the panel. It has been lovely, and thank you all for listening.
And hot.